Hey guys, how's it going? Welcome back to the channel. In today's video, I'm going to be breaking down a $5,000 trade. Actually, I think it was like $4,000, but my account is now in $5,000 profit, which I will show you guys right here. So if I go to, first of all, you guys can see the balance, $200,005. If I go now to the last week, right? So the last week, I've only taken one trade, and that was that trade yesterday on Euro USD, and you guys can see this is on a 200k funded account with ACG as well. Okay, so I'm going to break down this trade right now. I called it in my community as I always do, which I'll show you as well. But yeah, let's go straight into the breakdown and show you how I was able to do this. Okay, let's go. All right guys, so looking on the charts right here, you can see this is the trade that I took. Okay, and if I go and show you the Discord quickly, I'm going to just show you, as always, proof of actually the execution and proof of taking it on a live trading call. So as you can see here, on the live trading call with my community, I said I was looking for this demand zone, then price came into the demand zone, and you guys can see the trade won. Okay, really nice position. The only concern with this position is it was on an FOMC day. However, I didn't end up closing it at Asia high. I actually closed it before. So realistically, the trade is actually more like this, okay? Because yeah, I wasn't going to hold it through FOMC. That is totally stupid to do. So actually, this is how the trade looked because I closed it early here. My exit was basically these highs up here because, like I said, it was FOMC. So it wasn't worth taking the trade, right? But now let's actually go into the full breakdown of this position. And by the way, I still trade on FOMC days. It's just I will always close it way before FOMC comes out. Okay, people think that you can't trade FOMC, but you can, especially in this case because FOMC was out at 7 p.m. UK time. You still have London session to catch a trade. You know, don't get me wrong, you can still trade it, but you just have to be careful, okay? So that's the trade that I took on EU, but let's start by going over the higher time frame for this position so you can understand why I was looking for buys. Okay, first things first, if we have a look here on the daily time frame, the structure is clearly heading to the upside. You can see here that we have actually broken past these highs right here. Okay, yesterday broke past those highs and took out the liquidity from here. And this basically shows us that the market is pushing higher. Okay, a lot of people, what they will do is they will see a sweep of this liquidity and immediately think that they need to look for sells just because some form of structural liquidity on the higher time frame is being swept. But that doesn't really matter. If the overall bias is bullish, which it clearly is because look at the higher time frame, we are clearly trending higher, right? It doesn't really matter if we sweep highs in the market. Yes, you might see some sort of retracement, but for the most part, it's still going to continue ultimately in its direction, which is to the upside. So my bias was still bullish. It doesn't really matter the fact that we've taken out that high up there. And that's why I was still looking for buys, okay? As you can see, we took out the liquidity from that high, had a pullback, and then I was expecting to continue going higher from my area of interest, okay? And that kind of leads us on to the next part of the strategy, which is waiting for our point of interest to be entered into. So in this case, if we look here on the hourly time frame, we had a few different points of interest we could have looked to trade. We had this hourly fair value gap right here, which actually did get tapped into a little bit, I believe, for this position. And then on the 15-minute time frame, we also had as well this 15-minute area of demand. Okay, so I like to draw out my demand areas by basically drawing out the last down candle before the move up. So it was technically this area right here. Okay, I always like to include the wicks from the previous candle as well, just so that my area can be a little bit bigger, just in case there is any sort of manipulation that happens, which I think in this example there actually was, right? But because I drew out my zone bigger than expected, it allows me to take into consideration the fact that there could be manipulation from this area. And now I had my points of interest identified, which was going to be this area of demand and also this hourly fair value gap down here, which, like I said, you know, we definitely could come in towards just because there will be a draw towards it. So I was basically waiting for something like this here, okay? So that's exactly what I was looking for. Very, very simple. Like, it was a very, very nice trade, to be honest. So I waited for Asia low to get swept, because that is also a super important thing to do when it comes to trading this strategy. So the Asia low is going to be down here. I waited for that to get swept, and then I looked to enter into the position. Okay, so not yet, but yeah, around here, once we saw this volume coming in, that's when I was definitely interested in taking a trade. However, the selling pressure here was really, really strong, and because of this, I didn't really want to take the trade, right? It was FOMC, and at this point in time, I was kind of thinking, you know what, this trade right here, it looks like it could potentially happen, right? We were getting nice reactions from this demand zone here, but it was still quite early into London session. You can see here, 8 a.m. had only just begun, and I only like to trade after 8 a.m. So I wasn't really that interested in taking the trade here. I don't even think I was on the charts, to be honest, at this point in time. Like, we were getting some sort of reaction, but like I said, it was FOMC, and I wasn't really wanting to trade. So I basically let price just play out, okay, until basically I saw this, right, which eventually will happen. You see here, we saw even more inducement, okay, so price actually came down again, taking out any buyers from here, and kind of disrespecting this demand zone slightly, but it still was respecting it as a whole, right? The whole area here was getting respected. It's just, I think it went out to take out this liquidity from this low down here. But as a whole, the area was still looking good, and I was still looking to take the trade, especially now that we had seen the inducement from this low right here, which, by the way, just makes the position even stronger, okay? And then now, I was basically looking for an entry. So the time was around, yeah, 11 a.m. We saw inducement, and now, yeah, it made sense to take the trade. Yes, it was FOMC, but the trade looked quite good. So I waited for a 1 minute change of character, and I got my entry somewhere around here, okay? Because at this point, we were seeing some clear buying pressure coming in, but the change of character for this position, and this is kind of where it does get tricky, would have been up here, but I didn't really want to wait for that to happen, because as you can see, if I had waited for this, my stop loss would have been quite big. So I did what's known as, you can call it a risky entry. I personally don't think it's that risky, because I already knew everything about the trade was met that I wanted to see, such as the point of interest mitigated, seeing buying pressure coming in, okay, inducement of all of these lows here, building up more liquidity to fuel a bigger move to the upside, and basically at that point I will enter the trade, okay? Yes, there was no change of character here, so yes, technically the trade wasn't 100% perfect, but I'll be honest, in trading nothing is 100% perfect, okay? So my entry was basically like this. My original target for this trade was the Asia high. However, as I said, it was FOMC, and it wasn't really worth risking it for FOMC. Of course it's not, okay? Because who knows what FOMC could do, right? So that's the trade I took. We did have a bit of drawdown at the beginning, okay? And price, to be honest, just kind of consolidated in this area here for quite a while. And then eventually, I ended up closing out the trade at these highs up here for about a 1 to 2. I got exactly a 1 to 2. So whatever I made on my account, $4,000, was exactly a 1 to 2, right? And yeah, I closed at these highs here, which did eventually get hit because we had FOMC at 7 p.m. And like I said, it wasn't worth holding the trade until 7 p.m. because that's just extremely stupid to do. But the trade did win. It was a nice position, and if you caught this one, it did fit the strategy. You would have made some money. It just was risky because of FOMC. However, like I said, I think at the beginning, just because there's FOMC, I don't avoid trading completely. I'm just very cautious. And if I see the position play out like I did here, which fits my strategy, I'll still take it. But I'm just aware that, you know, it's going to be risky to take the trade. And in case you're wondering, by the way, how I was able to avoid taking this loss here, because don't get me wrong, here did look quite nice, right? Price came into the demand zone here, and it did give us a nice reaction. So you're kind of wondering, why didn't you take the trade here? I'll be honest, it's just one of those things. I just wasn't interested in taking the trade at all, right? Because it was FOMC. However, because of that, I was patient, and then when I saw the inducement of these lows, that's when I became interested, right? I think a really important tip, right, and I'm going to speak specifically to the camera right now, is to avoid trading days that you don't want to trade, but only decide to trade if you see inducement, for example, of the trade that you didn't want to originally take. Now, that might be a bit confusing here, but going back to the charts, you can see this trade right here wasn't that good of a trade because it was FOMC day, right? However, once we saw the inducement, it kind of now makes the trade a bit more interesting to take because it's an extra confluence. And that extra confluence originally wasn't there, but now because it's here, it is worth taking the position, right? The strategy looked perfect. We saw entry into this demand zone and the 1 hour FVG. Asia low was taken out. We saw inducement on the 15-minute time frame. We saw nice buying pressure coming in. That's a position that I would take every single time, right? And also, I forgot to mention, the reason I was trading EU and not GU is because on EU, the demand zone was much nicer, okay? On GU, it actually did go up straight away, and you could have traded on GU as well, to be fair. But the demand area here was really quite big, and I didn't like how choppy this was looking here, okay? There was a lot of liquidity resting below this consolidation area here. So what I was kind of thinking when it came to looking for a trade is maybe what GU will do is it will sort of induce all of these early buyers here, right? Sort of what we saw in EU, take out all of these buyers here, and then take out the liquidity from here and then go higher, right? So I didn't want to risk taking the trade on GU, which is why I looked to trade EU instead. And also I forgot to mention that there was alignment with DXY as well, because as you can see, this is the demand supply zone story I marked out for the DXY yesterday, and it came into it. We saw a nice reaction from this area, which is also another reason for taking this trade. Okay, so that's something I forgot to mention, to be honest, completely. But the DXY was also aligning, and as you guys will see, it eventually ended up shooting down, and then after FOMC it came back up. But the trade did play out perfectly, exactly as expected, and that's exactly how I made $4,000 on that position. So yeah, hopefully that made sense, guys. If you are looking to join my community where I do trade live every day, show you proof of everything I take, and actually tell you the trades I'm taking, then there'll be a link below to apply for my mentorship, and hopefully I'll see you guys inside. But yeah, other than that, make sure to subscribe if you enjoyed the video, and I'll see you on the next one.